As of today, I'm starting a YouTube channel so as to serve you better and reach more of you. My goal with these quick videos is to prepare you as briefly as possible within a couple of minutes for the trading day or trading days ahead. But remember that the daily analyses that are freely available on my site form the basis. So get the free subscription, it's free. Twitter and Telegram are serving rich extra additional talk, and I'm serving both paying and free clients, as you know, and quite a few, more than a few of you, since February 2020, when I first started writing publicly under my name. So let's start with stocks, and it would be the big picture before getting absorbed in the daily moves. As I see it, tech is not to be hesitating in leading first full pullback in ES, then probably a decline. Decline would develop, and we are in the opening stages of determining how far this pullback would reach, because the bears are on the initiative. Downtrend development is, in my view, a question of a relatively short time, perhaps as short as 1 to 2 weeks only. So what has been this, as I see it, bear market rally based on? The first misconception is the no landing story, then the story that the recession has been completely avoided, which would be proven false in my view. I stick to Q3 recession arrival prognosis still. The second misconception is that all the AI stocks would be leading the rush on forwards higher in defiance of yields, and that this move can really last. It's a pretty sizable disconnect if you overlay these charts. And the third misconception is that the Fed had reached the terminal Fed funds rate, that is practically here, and rate cuts, sizable rate cuts, are on the horizon. This is in complete disregard of what Powell had been stating. And we will see Wednesday and Thursday him to reaffirm the hawkish posture. Friday, manufacturing and services PMIs are to keep declining, which means basically that the stronger services would still keep, of course, in the expansionary territory, but would be decelerating, whereas manufacturing would remain mired in the recessionary territory. It's that LEIs have been declining for 14 months in a row practically. Yield curve is still deeply inverted, and it had been inverted twice. Bank lending standards are tight, and earnings projections will have to be hit. The same will have to be re-evaluated. The same goes for profit margins, operating profit margins, free cash flow, because consumer is not ready to power the consumer economy that the United States is indefinitely. He's burning through the excess savings. And I view Friday's quad witching as a shot across the ES bow only. It's the starting episode, testing the waters only. Because the stocks to bonds and bonds junk versus quality ratios have not yet rolled over. So here we have the daily chart showing the extent of Friday's pullback. I would not be worried about the high volume. It's typical of options expiry. I would look at the sectoral composition, where I see former leaders leading, this time on the downside. If I saw tech declining on significantly higher volume than it did, then the case for not a pullback but a start of a proper reversal would be more clearly cut. But that has not been the case thus far. The rotations into defensives, proper defensives such as utilities, had been, of course, the telltale mark of this being something more than a regular rotation potentially. A bit of home builders, real estate can catch a bit as well. Later on, as we move forward in the recession story, the recession narrative playing out in mainstream media, we would see consumer staples and some parts of healthcare move up later as well. For now, though, the strong rotations into materials, industrials, and transports is not enough. Retail has been sputtering over the last couple of days. So what does that mean for ES as the futures contract? 4460 is the weak resistance. It was broken on Friday, and today's trading would, of course, not bring about its overcoming. 4434 serves as my first solid support, and there would be the story between either a decent pullback for now or start of a reversal that has to attract more fresh sellers, we decided. So this can develop both ways, and I see the sellers as having the short-term upper hand as we go into tomorrow. Let's have a look at the percentage of stocks trading above their 50-day moving averages. It's not as strong as the rally of October lows, but the improvement has been noticeable, very noticeable, especially in the equal weighted S&P 500 index. The low-hanging fruit has been has been harvested, in my opinion, already. Now the air is going to get tough, and as the big names start sputtering because the tech fear of missing out really can't go on indefinitely, it is very extended, but there might be some fuel in it left still. This is always the case with pretty exuberant upswings, hard to determine whether that's the top or not. So I have to look for cues where the rotations start sputtering. So for now we have still improving and only on Friday kept in check market breadth, and the hallmarks of daily rotation are thus far only hallmarks. So I don't see yet enough of a rush to the exit door. Neither of those top 7, top 10, or however you phrase it, leading stocks that have the greatest weighting in the index have declined yet too much in a clear risk-off fashion. As an extra, because you know that I cover so much more than stocks, precious metals and commodities, as well I talk cryptos from time to time whenever that merits an attention. Let's move to precious metals with a brief update. Again, this is the daily chart with my typical overlays, watching the gold price. Miners are kind of confirming the upturn. Silver has rallied. Of course, that's the way it happens whenever the good consequence of consumer confidence data, as was the case of on Friday, strikes. However, the volume has been quite muted, and the still tight Fed and US dollar not yet being done rising in spite of the deep downswing that took it, well, closer to 101 than 102, which is pretty dangerous territory long term, would still work against the precious metals. So I see the correction there as still unfolding, requiring more time, and the levels given are for now safe. As well, Thursday's candle, the clear reversal in the doubting the Powell hawkish message was quite clear, so these lows would hold for a while, definitely. So, I do analysis on stocks, precious metals and commodities every day, proper articles, which are all covered within the stock trading signals publication. That's the free daily publication available on my site. And for real-time calls, updates and two-way discussions, pay attention to my Twitter feed, always open and rich, and also Telegram channel. Note that site terms apply, and in case you don't know me well, but most of my readers are loyal and they know me really well, you can visit on the top left corner on my site the bio link, which would tell you my journey in a sense. Finally, the obligatory disclaimer: not financial advice, and site terms apply. Please do read through properly. Thank you and talk soon.